paper. I've never found any issue with it. That one I can assure you, it is an easy paper. Let me just first of all open the syllabus. Here we are. All right. So while here, I'll be able to go straight away to advanced management accounting. Here we are. So then I will go through the syllabus, ladies and gentlemen, and then I tell you why every student should be happy doing advanced management accounting and why it should be able to matter when it is in your CV. So paper number 16, advanced management accounting, unit description. This paper is intended to equip the candidates with knowledge, skills, and attitudes that will enable him or her to apply advanced management accounting tools and techniques for decision making in the context of organizational strategy. Ladies and gentlemen, of course, we know as accountants, we shall always be at the cog of strategic decisions of any organization. We shall be the center. We shall be at the center of any decision making regarding the strategy of an organization. And therefore, this gives management accounting an upper hand as a subject, which all accountants should be able to do. Now, I can see their charts here. Let me first of all go through them. At times, these are good charts. We get to know how we are progressing. It's greetings. It's greetings. It's greetings, which is very good. These are greetings are very good. Very good. These are greetings are very good. The ninja is fine. The ninja is pretty fine here. And I hope that you guys are doing well. All right. All right. So here we are. So management accounting. So we are told here, I'm repeating again, that this paper is intended to equip the candidate with knowledge, skills, and attitudes that will enable him or her to apply advanced management accounting tools and techniques for decision-making in the context of organizational strategy. Learning outcomes. A candidate who passes this paper should be able to use cost estimation data in decision-making. Apply advanced management accounting techniques to aid in organizational strategic decision-making. Use financial and non-financial indicators to measure organizational performance. Apply environmental management accounting concepts in practice. Use cost estimation data in decision-making. Now, ladies and gentlemen, let's look at an organization like breweries. Kenya Breweries, East African Breweries. We know what they make. They make beer. And of course, there is no way that beer will be able to find itself on the shelves of these supermarkets and the counters of those bad places if they do not package their beer properly in bottles or in whichever form of packaging they use. Now, please listen and listen to me very well. Bottle manufacturing is not a primary duty of EABL. Their core mandate is to make beer. So bottle manufacturing is secondary. And what we are being told, ladies and gentlemen, nowadays is to consider outsourcing all secondary water products. Try in this case here, outsourcing secondary activities. If, for example, you're a bank, don't employ a security guard under the bank's HR, human resources. No, you don't have expertise of, security. So in this case, you would rather get like if it's 𝐂𝐸 security or whichever security and outsource, get a person working for that company to come and guard you. That is the essence of what we are outsourcing, so they can be left to do banking, which is our core activity, what we are known for. The same case with the breweries, they would want to be left with their core operations. So then they'll call you as a management accountant. Tell you, fine, inside here, we have a bottle manufacturing plant but we are thinking of outsourcing. We are thinking of buying these bottles from a renowned bottle manufacturing company like, for example, Central Glass of Kenya. So then the management accountant, now being the expert he is, or she is, they will come here straight away, do cost estimations, do cost analysis. They say, if you guys are producing these particular bottles here at Kenya breweries, then this is the costing bit of it. You're going to need labor. You're going to need raw materials. You're going to need, in this case here, an office. You're going to need a production facility. So there will be what we shall be calling overheads. Overheads, 𝐤𝐿𝐥𝐿, the common expense, which have to be apportioned to each bottle. So if assuming labor will cost you 20 per bottle, assuming raw materials will cost you 10 per bottle, assuming in this case here overhead will cost you 10, another 10, it means that the total cost per bottle will be 40. On the other side of the coin, what if Central Glass of Kenya, because of their mass production of bottles, they are willing to sell to us each bottle at 23 shillings. So I'll be putting my weighing scale like this. We have 40 here vis-a-vis 23. We are cost minimizers. Management accountants are wealth creators. To create wealth, one of the ways of creating wealth is to enable companies to minimize their cost, and as such, they shall seek to go for 23. So really, management accounting is about cost schedules. It's about the simple things that we shall be looking at around here to be able to pin down decisions that will be helpful to these organizations. And that is why we are being put at the core of the strategic making processes of these companies. All right, ladies and gentlemen, from there, we shall be able to go to the next thing, which now is content. In the content, what are we talking about here? So we have been able to look at learning outcomes. Now we go to the content. So content number one is strategic management accounting information. How strategic is this information? Sources of strategic management accounting information. We have the role of strategic management accounting in strategic planning and control. We have the governance and the control of strategic management accounting information, and then scope and limitations of management accounting. Lastly, we have the ethical standards of management accountants. Ladies and gentlemen, remember, as management accountants, we shall get exposed to a lot of information regarding this company. We are the ones, in this case here, we shall be advising these managers, because the biggest role of a management accountant is to prepare schedules and give these schedules here to managers. Managers will be able to use those schedules to make decisions. Therefore, we need to be very ethical. So we have those ethical standards that guide management accountants. There is an ethical standard talking about objectivity. There is an ethical standard talking about what your confidentiality. We have the concept of integrity. We have professional behavior. We can't be the ones who are stealing. We can't be the ones who are taking alcohol during working hours. How we behave should be able to promote credibility of 𝐸𝐴𝐶. Then, of course, we have what we call professional competence and due care, ethical standard, which calls upon all of us to ensure, ladies and gentlemen, that we are engaging in learning continuously. We have to keep on honing our craft and becoming a better management accountant. In this case, here, keeping abreast with technology, etc. Otherwise, if you're serving clients and you're not qualified, you're not competent, then automatically you are unethical and your space is in jail, not outside here. Then we have what we call cost estimation and interpretation. And the cost estimation and interpretation, what do they want us to study? They want us to study the ordinary least squares method. This ordinary least squares method is the normal regression analysis that you did at the intermediate level, where they would want us to look at the single and the multiple predictors, tests of significance. And a test of significance, we shall be looking at what we call goodness of fit. We have ANOVA. ANOVA is analysis of variances, p-value. economic plausibility tests, significance of independent variables, and then we have the famous t-test. 2.2, specifications, assumptions of ordinary least squares. They want us to look at those assumptions and critique them. Like we have an assumption of linearity. We have an assumption of serial correlation or a serial autocorrelation. We have what we call multicollinearity. And please, even before we start looking at the nitty-gritties of these topics here, when we talk of multicollinearity, you see a regression equation is y equals a plus bx. If it's a simple model, so we have y and x. So we have a dependent variable and one independent variable. But at times we may have equations of this nature. Y equals a plus b1 x1, b2 x2. So when you have these two independent variables, both of them should relate to y. But they themselves, in this case here, should not be significantly related. X1 and x2 should not be significantly related. If they're significantly related, then we shall have a problem of many relationships. We shall have a problem of multicollinearity. Multicollinearity. Ladies and gentlemen, this thing is supposed to be one-on-one. X1 related to y, x2 related to y. But once we have x1 and x, the independent variables are being related, then we introduce what we call multicollinearism, which is a bad thing. Ladies and gentlemen, from there, we have the concept of computer output. This is very common, and it's common in AMA and what we call business data analytics. So 2.3, computer output and technical versus managerial interpretation of these ordinary least squares results. And then they want us to teach you guys what we call learning curve models and their applications. Learning curves is so close to my heart. Ladies and gentlemen, everybody has got their own beginnings. When you have new employees coming to your offices and then they start debiting what they should be crediting, you should never be laughing at them because these are highest point of their learning where they know almost nothing. But ladies and gentlemen, as they progress, the time taken out to produce subsequent units here reduces. They start becoming faster and faster. So everybody, including Mwalimu here, we have our humble beginnings. There are times I remember myself, I could take like a paper like this, advanced MA, even 6 months. I would not finish the syllabus. But now, given, of course, what we know, despite the fact of casting about times getting to get questions from the bush. But I'm so sure within 2 months, I should be able to finish this advanced MA paper quite fast, because of the learning curve. So everybody has their own humble beginnings, and I'll be able to show you very, very important formulas here, like for example, to get B, which is the learning index. We normally talk of log R divided by log 2. Today I'm not teaching math. I'm simply trying to show you what this subject called AMA entails. What does it entail? Now, ladies and gentlemen, from there, we go straight away to this concept of what here? Planning and decision-making techniques, where they want us to teach you guys about cost volume profit analysis, CVP, for single and multiple products under conditions of uncertainty. If you recall from your CPA section 2, intermediate level, we used to say X break even. X break even, if you remember to break even, you must be able to cover all your fixed costs and the variable costs. And to get this X break even, the point of zero profits, we used to take fixed cost over CM. Fixed cost over CM. Is there any ninja here who remembers the formula of getting CM? Or even what CM stands for in full? Is there any ninja who is able to remember what CM stands for in full? Is there any ninja who is able to remember what CM stands for in full? Any ninja who is able to remember what CM stands for in full? It's called contribution margin. Thank you so much. And the formula of getting CM, we normally take the selling price minus the company's products, variable cost. So anytime they want us to give them contribution margin, we shall be taking P minus V. If this product is going for 10 bob and the variable cost is 4, then the contribution margin shall be 6. The contribution margin shall be 6. All right. Now, the gentlemen, from there, we have the concept of we have the concept of decision making under environments of uncertainty and risk using conditional payoff tables and decision trees. We are getting decision trees in AMA, and we shall be getting them in AFM. How lucky are we? Then we have the expected value of perfect information. And gentlemen, all of us, especially whenever we have some means, before we engage into something, we must get experts. If, for example, today I would want to build, I must get, for example, a quantity surveyor to first of all, in this case, you tell me like, how is the costing of this house looking like? On average, and you may need about 20 million. But I can now make a decision. Am I going to borrow? What am I going to do? Or is this problem here gigantic? So that I should be able to drop it, right? So the cost that I'll be paying to this QS is what we call value of information. Value of information. There are people, I'm told, that they want to go into politics, like somebody here wants to go into politics to look for example, a member of parliament at their place. There are people who even go to Nigeria looking for these guys. I think they are sorcerers, right? And then these guys are able to predict for them. I think they get some like coins they throw like this, and then they tell you, you don't waste your money. You're not going to win this thing. But of course, mostly they teach you that you will win, isn't it? So of course, whatever information they give you cannot be perfect. What perfect kind of information can you get from a muganga? Muganga can only cheat you. That's what we call imperfect information. All right. We only get value of perfect information from professionals like yourselves. Of course, once you qualify. For now, if I pay you to give me information, you may give me imperfect alternatives, and then I roast it. Then we have relevant cost analysis, very important. 3.5, application of marginal costing and routine decisions. Limiting factor analysis. Then we have throughput accounting, make or buy decisions, continue or discontinue, drop decisions, special order decisions, and other short-term decisions. Then we go to pricing decisions, ladies and gentlemen, where we have external pricing method, transfer pricing, individualized companies, domestic and international transfer pricing. Then we have product life cycle, target costing, and Kaizen costing. Ladies and gentlemen, remember all of us, we have what? This life. Just like products, we have this life. So when you talk of product life cycle, we shall always have something that behaves like a 𝐂𝐨𝐿𝐿. So in this case here, at the beginning here, we have what we call birth to the world. And then of course, you grow. So in this case here, you are growing, not unless you have a defect. We expect you to grow when you take Cerelac and your mother's milk. You're growing. And then after some time, you reach maturity because you can't grow forever. If you continue growing forever, you become a giant. So you mature. After maturity, you start going down. Of course, you're declining. So you have declining phase. So after that, of course, we expect you to enter into the most unfortunate segment of your life, which is death and withdrawal from this world. I know that's a phase nobody loves. Even me, I would not want to reach there very fast. But basically, that is the life cycle as well for products. Products also have got this birth and entry. So when we are giving birth to these products, we must be able to know which kind of products are we giving birth to. If we have given birth to products under a high competition, then those products we have to charge a smaller price. The smaller price we're charging is what we call a price penetration strategy. We want to penetrate. So if the competitors are selling 30 bob, so we sell in this case here, these things at 5 shillings, 5 shillings. Of course, that is too low. But again, the most important thing after penetrating, we expect to start increasing the price as customers appreciate the value of our things. Great, Yvonne. Thank you so much. So at times we give birth to products which are known as Veblen or products of ostentation, the symbol status products. These are those products in this case here that the who is who, they would want to be seen around with. They're called goods of ostentation. So like, for example, when the hammer came at the very first, Every senior member of this republic wanted to be seen without a hammer. They were really hammering people, showing people that we are doing very well, you know. So if you give back to that kind of a product, then you charge what we call a skimming price, a skimming price. For those of you who are trying to fight weight a little bit, who appreciate that milk is not very good, when we go to hotels, when we want to take milk, what we do, we tell the hotel people to give us what we call skimmed milk, milk without cream. So like the hammer, you charge a very high price. But once in this case, other competitors start coming up with their own version of hammers to fight them, now that you have been able to get huge profits, now you start skimming, going down, you start skimming, going down like that, you start going down, and then of course you get your bigger market share by the day like that until you overcome, Thank you so much. I can see now we are 41. For FMA, this is unprecedented. This is very good. This is very good. This is very good. This is very good. Very good. This is very good. Ladies and gentlemen, then we shall be able to talk about so many things here. Like we have target costing. We have in this case here the Kaizen costing. Remember this Kaizen costing? These are basically those models that are normally used by Toyota Japan. Same as in this case here, just in time, the JIT, right? JIT, just in time, is that system that does not believe in what year, that does not believe in inventory. They procure goods for immediate usage, so no storage at all. So you don't have inventories in terms of raw materials, no inventories in terms of work in progress, and no inventories in terms of finished goods. No inventories. No inventories. It's called JIT. So Kaizen purely is about that. It's also about total quality management. So the Kaizen costing, basically we're looking at perfectionism. All right. We manage in this case here our quality perfectly. All right. And we shall be able to look at this in detail. So basically Kaizen mirrors around those things, and we're going to see what really, JIT is just in time, yes. All right. Now from there, we go to the pricing decision that's over. We have strategic performance measurement. Strategic performance measurement, they want us to look at functional and divisional organizational structures, responsibility accounting, responsibility centers, and the segment reporting. They want us to look at divisional performance measures such as profit margin, assets turnover, return on investment, return on capital employed, residual income, accounting rate of return, and average economic value added. 5.4, we have non-financial performance indicators. Non-financial performance indicators. And then 5.5, we have alternative performance measures, such as the balance scorecard, performance pyramid. We have the 𝐤𝐳𝐿 and the moon building blocks. Now, if I may start with this 𝐤𝐳𝐿, the moon and building block, just explanation. Remember what these gentlemen, two of them said here, that's 𝐤𝐳𝐿 and moon. They said that if you want to succeed in business, then automatically the employee is the king or queen. It's never the customer. You take care of your employees very well, and then they shall take care of your customers. The employee becomes, in this case here, that somebody becomes the king. And then they said very well, we have got 3 blocks. First block is what we call the targets block. You should be able to set standards with these employees together using bottom-up approach. Involve these employees when you're setting standards with them. After that, we have another block here where you're supposed to reward the employees who are able to meet these standards or targets. And then now once you take care of those 2 blocks, the last, which is the third block, is known as the dimensions block. So this dimensions block will always become bigger and bigger the more you really inspire these other 2 blocks. If employees are quite happy as regards to how you are giving them standards, you're involving them, they feel involved, and then you're rewarding them. Then at the end of the day, ladies and gentlemen, what will happen is that these dimensions block, like profits of the company, will go up. Resource utilization, resources will be used very well. You'll not get a situation where these employees in this particular hotel are ending up eating all the meat, and then you've got nothing to give your customers. They'll end to eat all the meat there and all the good mandazis, etc. If you're not taking care of them, involve them, give them rewards. And once you do the two, then the dimensions like the resource utilization, that will be up there, taken care of very well. Another dimension which will automatically improve is what we call flexibility. Flexibility. Don't write anything because I'll be giving you these notes. I'll be giving you guys these notes. Don't write anything. I'll be doing these classes. So flexibility, so many businesses in Africa die because of a lack of agility by employees. Employees are never agile, most employees, because you haven't taken care of them. So you can imagine, we have in this case here, let me try to guess, like Alice. Alice in this case here may not be married. I'm just giving an assumption. I'm just making an assumption. And Alice in this case is looking forward to doing a wedding in a month's time. And Alice has got means. So she is able to import her wedding gown from Dubai, like even 2 or 3 months much earlier. So, and of course, these ladies, when their wedding is very, very close, when it's very, very close, they don't want to add any weight. I'm telling you, they starve. That's what I'm told. I don't know, but I'm told they can even kill themselves while starving. So what do? Every day, they must, in this case here, try the gown and see whether it is well-fitting every day. So she does like that. Week number 6, perfect. Week number 5, perfect. Week number 4, things are adding up. Week number 3, things are still adding up. Week number 2. Now we are coming 3 days to the wedding. She puts on this great white gown, trying matching closer to a mirror like that, without, in this case here, her knowledge, there is a kid who is nearby, and this is a very young kid belonging to some neighbor. She comes with porridge and pours the entire cup of porridge on her wedding gown. 3 days to the wedding. She cries rivers of tears, but that cannot help. So she comes straight away to Antonina's laundry. So Antonina Laundry, if Antonina is not there, she's given out this function to employees who are not very well motivated. They will tell this lady, oh, would have loved to help you, but we have a policy. This kind of an attire has to stay with us for 7 days. The question is, can she extend her wedding day? No. No. So then she goes to another laundry shop of a gentleman whose employees are well taken care of. These 2 blocks, the standards were set very well with them. And then, of course, we have the rewards are always being given to them whenever they deliver. So in this case here now, this is where the concept of flexibility comes in. So you'll get even somebody looking at this lady, how distraught she is, how disturbed she is. Even by walking, you can tell you ladies are not like men. You always say this lady is in big problems. You can see. And when they are happy again, you can know. They're our mothers, they're our sisters, they're our wives. So we know. So as she's walking in, I can see in this case here, things are not very okay. But remember, I'm motivated. So even my levels of empathy are much higher. So, hi, Alice, great. Blah, 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 blah. Look at this. Cool down. When is your wedding? 3 days from today. No worries. Of course, we have this policy of 7 days. But because of your situation, we are going to craft something for you. We shall tailor something for you. We shall be able to have an express wash for this cloth and come for it tomorrow. Agility, flexibility. It's only employees who are well taken care of who can manage that kind of a situation. And of course, because of this flexibility, then we shall be able to discuss with Alice that this kind of cloth, whenever it's brought here mapema for cleaning, we normally charge 1,000. But because yours is express, you'll pay us 20,000. Do you think Alice will refuse parting with 20,000? Do you think Alice will refuse parting with 20,000 for that express service? Of course, no. She doesn't have many options here. And trust you me, even from inside, she will be very happy. According to 𝐤𝐼𝐶 and Moon building blocks, take care of your employees through these 2 blocks here, and then the other things about quality for your clients automatically will go up. And of course, you're going to be more innovative. One of the things, and the mention is, it talks about innovation. I remember some time back, we used to go to some of these banks. Like, for example, at RSM, of course, our students are very many. Of course, we don't have a lot of money. But what I lack, like personally, is the time to go and queue in a bank. You can't get me queue in a bank. And I'm saying this with lots of humility. What banks did, initially we used to go like if it's Equity Bank, you move around like this, and then of course you see how big the queue is, you run away. And you could take like 2 or 3 days without even banking. Because time to me is big asset. So now, because of this kind of concept here, innovation, they were able to be agile. They were able to be flexible. So they came up with express counters. So you go to an express counter, you're given a chocolate, you're given, in this case, a cup of coffee, a cup of tea. But remember, the others are being charged 50 shillings for the normal transaction. When you look at your bank statement at the end of the month, for that one visit to the bank, these guys have clobbered your account with 1,500. But you see, at the end of the day, it's all about what here, the express service. And that express service must have come simply because of what here employees who are being involved in standard settings, and of course, who are being rewarded heavily for meeting their targets, who were able to sit down and they were able to, ladies and gentlemen, the worst mistake we do. I know this is a mistake that most of you will be doing. If you look at the listed companies in Kenya, most of the CEOs are CPAs. So even here, like I have 41 students here on the table here. I'm so sure 3 years down the line, about 10 of you will be CEOs. Very big for SME companies, about 10 of you will be CEOs. Please ensure that you take care of your employees very well. If you take care of them, they'll take care of you, and they'll take care of what here, they'll take care of your customers. They'll take care of you because they will be part of your will to make innovative ideas come into fruition. It's called 𝐤𝐼𝐶 and Moon. Very popular in the exam. You'll be able to see from the past papers. 𝐤𝐼𝐶 and Moon. So for those of you still who are getting children on top of, ladies and gentlemen, you getting advanced management accounting, great content, you'll be able to get names that you can call your kids. I don't want to hear anybody calling their kid Joshua. Nobody should call their kids who now are Benson. Right? Those historical names now we don't want to hear them. Now we want to hear about great names like 𝐤𝐼𝐶. Does it sound very good? No. I'll be telling you the very best names to use. So shall be killing 2 birds with 1 stone. All right, okay. All right. Now, ladies and gentlemen, from there, we have here what we call the balance scorecard. So under balance scorecard, ladies and gentlemen, we shall be looking at the performance of an organization from how many perspectives? From 4 perspectives. Anytime you want to see how healthy a company is, we shall be looking at 4 perspectives. So these 4 perspectives are which one here? The 4 perspectives, number 1, we have the financial. You must ensure that financially you're doing well as a company. So financial perspective, look at your costs, always put brakes on your costs. Don't just spend monies haphazardly. This money doesn't belong to you. This money belongs to the company. Remember the business entity principle. There are guys who do businesses, they get 20 million. The next thing you hear is them having imported, in this case here, a big machine, worth how much? A big machine worth 16 million. That means that financially you are not really okay. Financially, in this case here, you are illiterate. We have to put brakes on expenses because at the end of the day, we need resources to become innovative. We need resources to be able to do very many things. So in terms of financial perspective, ladies and gentlemen, you must ensure that you are putting brakes on cost and always ensure that you grow your revenues. Because at the end of the day, we want to get profits. How do we get profits? To get profits, it's revenue minus cost. Push your revenues to the moon. Costs, take them down, but not to hell. Take them down, but not to hell. Then we have the second perspective. The second perspective, as we shall be seeing it, is really very, very critical and central to your business. It's called the customer's perspective. Be nice to your customers. So under customer perspective, ladies and gentlemen, there are 4 key things. Number 1, you must be acquiring new customers every day. Like I'm so sure these guys now, they are 42. Once I finish this class, I'm so sure I'll be able to acquire more than 10 again, students. So I'm really, I'm the CEO of RCM, by the way. The CEO of RCM, by the way. And if there is anything that preoccupies my mind, is about customer acquisition. We have acquired customers, the students. When we acquire them, the next thing as the CEO that I must always put my hands over is called customer satisfaction. I must ensure that these students are taught very well. And of course, for those of you who have been our students here, we may not be perfect, but of course, you know that we are way, way above average. Way, way above average. We try our best. You realize that we could be among the fewest colleges here that are offering most of these subjects like thrice a week. We are giving videos. We have a learning management system. I'm so sure the kind of resources we give to our students, I mean, there are very, very few colleges that will be able to manage what we're doing. So because really as the CEO, as a team leader, my work is to ensure that these ninjas are well satisfied. After satisfaction, now we have loyalty. This loyalty is where I'm not doing very well. Because on loyalty, as RC, I'm supposed to be having like the Zawadi point card. People like Yvonne, you know, Yvonne, these are people we started with. By now, she should be having a Zawadi card from RCM, which has got even like 10,000 points. So that when she goes to, for example, BDA, at least she should be able to study, even if it's one section for free. Even if it's one section for free. All right. And then, of course, you should be able to have like T and C's, terms and conditions. Well, basically, we say you can only get this if you have been with us from level 1. If you have been with us from level 1, So there we are failing. If you go to most of these companies in the Western region, Western regions there, like talk of Europe, talk of USA, they really know how to reward their loyal customers. In Africa, here we joke. Because even some of the systems that we have in Africa here, like Safaricom, Bonga Points, I mean, they're not that really strong. The one that tried its very best, but unfortunately things never worked because of theft and other things, is NACOMAT. NACOMAT in those good old days, when they used to tell us that if you need it, we've got it, and for sure, all the time when we went to their stores were full of great things and offers. Those days, they used to have a very good Zawadi point. I'm telling you, their Zawadi point card, I would move from whichever branch. I would look for their branch somewhere along Mui Avenue. They're very, very old branches, simply because of what here being loyal to them was paying. The only one that I'm seeing really trying nowadays is Carrefour. Carrefour tries, but they're still not doing it very well. Like, for example, these big supermarkets like the Walmarts. They do it better, all right? Like during Christmas festivities, you'll get, for example, someone telling you, writing you a message, you come and do this and this, and the budget is huge. Or during, for example, school opening days, you get like a big check. And then you realize, hey, shopping here in this supermarket for a whole year can pay fees for my 2 kids, depending on which school, of course, they are going. Then that's like tethering, putting, in this case here, a rope on you and tying it to their supermarket. It's called loyalty. All right. So we have explained 3 things. That is under customer perspective. Balanced scorecard is a huge thing. As you guys become CEOs, always be thinking about balanced scorecard for you to have a balanced growth, for sustainable growth. So you've said under customer perspective, we have number 1, what we call customer acquisition. And then number 2, ladies and gentlemen, we have what we call customer satisfaction, customer loyalty. And then now we have this one where we fail all of us, what we call customer awareness, how you publicize yourselves. Like, for example, here, there are very few people I've seen who happens to be knowing the value of social media. Not many people happen to be knowing the value of social media to accountants. Very, very few people. Very few people. Because, I mean, we should be able to use social media to make the public aware about who Yvonne is, about who Ali Hussein is, about who Celine is. So going to TikTok, for example, for 1 minute, and then you say, my name is Celine, I'm a student of CPA, currently I'm doing advanced management accounting, but given my previous knowledge and studies, I mean, I'm very good on matters of taxation. So if you have got any tax issues, tax queries, if you've got, for example, any filings to be done at KRA, then Celine should be your first choice. And then you put your number there. As accountants there, trust you me? No, we are failing miserably. The only thing I've seen several here, they are beautiful, very handsome young men. What they know is to take good photos and, post very well on social media like this. They forget that social media is a market. Not unless you are there, even if I'm putting my 3 kids there, or my 4 kids there, I'm parading them. At the end of the day, I must say, as I'm shepherding these young people, I'm your great accountant. Then I put my number down there. It may not make sense in the first 1 month, 2, 3 months, but trust you me, in the next 1 year, the kind of following you'll get, these are not my theories. These are theories of Kaplan and Morton, the people who discovered the balance scorecard. The error of saying that if something is of a high quality, it can sell itself. In Kiswahili we say chema chajiuza, kibaya chajitembeza. Uongo. Siku hizi hata kama wewe ni mzuri namna gani, hata kama wewe uko high quality namna gani product, lazima utoke huko nje uadvertise. Si ni ukweli? Si ni ukweli? Oh, we are learning, I can see here. Si ni ukweli? Si ni ukweli? Lazima utoke nje uadvertise. Lazima utoke nje uadvertise. Lazima utoke nje uadvertise. Hawakubali maneno. Hawakubali maneno. Lazima. As a gentleman moving forward, and I've always taken my time as your chief ninja and mentor to advise you. Now we've gotten to where we call knowledge economy. You have some knowledge, you have some talents, get to know how to expose those talents outside there, then automatically will become very rich in the next 3 years. I mean, social media is changing things. And it doesn't matter in this case here the kind of content you take, but of course accountants don't take bad content. I would want you to go and take clean content outside there, and you will thank me after 3 months, not 3 months, but 3 years. A good question for in matters of in all honesty. How did you guys get to know about RCM? Can you give me feedback? How did you get to know about RCM? How did you get to know about RCM? Be very honest here. How did you get to know about RCM? Facebook, thank you, Saboke. YouTube, right? YouTube, right? Yeah, referred by a teacher. YouTube, Dr. Aura, you can see there. TikTok, CV, TikTok. All right. You see, that's why if you look at TikTok like yesterday, I'm so busy, I'm creating content. Because again, I told you yesterday that there is no way you will be a consumer. That wewe unajua watu wote wale, yani mtu akifanya kitu ujinga namna hii, ushafuata. Akwe ni lean, Gugi, umejua video zake zote, nenda na room na unasikiza kwa nataka kulia, which are depressing videos. I don't watch depressing videos, I can only go to our work. Depressing videos, I can only go to our work. Niangalie zile motivating, right? Right? Ushajua mwingine akaniambia jana, mpaka hata demo wa Facebook. We have reached an era where everybody has to be a content creator. You must be creating content. Otherwise, you're going to be a slave. You're going to be a slave. You're going to be a slave. Great. I'm getting in this place here from fast. You fast and you fast from Facebook, then from Unikajua, you can see a friend, referred by friends. Great. Thank you so much. But at the end of the day, trust you me, social media is a big thing. And I would want, in this case here, to share these successes with my students on social media. Like right now, I'm trying to push our page, RCM College page on LinkedIn. I've never gotten even a single student who is telling me, Mwalimu, why can't you just also go to my page on LinkedIn and do a review for me? If you guys were to use the LinkedIn algorithms very well, you guys can go very far. You can even say, for example, in our WhatsApp group, the one of RCM family, you say today, we are going to give reviews about ourselves. So the moment you have, like, say, 70 reviews yourself as an individual, when those potential employers are looking for any people there, your name will always pop up first. How comes you guys don't know this and yet you guys are younger than me? So you get somebody who has a very good Facebook page, not Facebook page, but LinkedIn. But I mean, without the reviews. And yet you have got billions of students who are in these RCM WhatsApp groups. You simply need to get like 40 actually. 40 is the optimal. Yeah, you get somebody to endorse you in terms of financial reporting skills, somebody to endorse you in terms of QB skills. I mean, in terms of this and this and this. So these are things you discuss among yourself. It's do this, I also do this for you. And then at the end of the day, we grow together because it's all about making the world aware of what Jimmy is able to do. And I will gladly do that. If I get that kind of information, I'll gladly do that. I'll gladly do that for you guys as I ask other guys. And FM, great. Thank you so much. So what have we said about customer perspective? 4 things. Number 1, we have acquire customers, satisfy customers, customers who are loyal to you, reward them. And then number 4, know the concept of awareness. If you look at these big companies that are doing very well, they are really good at publicizing themselves. Look at, for example, Safaricom. The biggest billboards you see around, they belong to Safaricom, followed by EABL. In terms of publicizing themselves, those guys are crazy, all right? And I would want, and this is where I normally fight with the CPA accountants who are CEOs. I normally tell them to their face that you guys are cost minimizers because of your nature. You're cost minimizers because of your nature of qualification. But whenever it comes to anything to do with marketing, because of the ROI, return on investment coming from this marketing, always don't minimize anything there. There are accountants, I don't know, you ended up becoming economists. You know, accounting is not economics. Accounting is you're supposed to be, I mean, even a net giver. But some accountants I know, you'll get some accountants, even, for example, your husbands, you're giving them ugali ya jana. Because you would want, in this case, to minimize what your cost. We shall overcome. 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 There are costs that shall not be minimized. There are costs that shall not be minimized. Now, ladies and gentlemen, from there, we got the 3rd quadrant of this balanced scorecard. So the 3rd quadrant talks about what the 3rd quadrant, ladies and gentlemen, talks about something very important. The 3rd quadrant talks about the processes, what we call the internal processes. According to Kaplan and Norton, if we want this organization of yours to really grow, if you want to spark growth for your organization, ensure that your processes are automated and you have managers who knows how to run these processes, including employees. They know how to manage. For example, you have managers who know principles of management like UMBWA. UMBWA is management by walking around. Otherwise, systems will not work if you get, in this case here, very bossy bosses here. Bosses who are basically like delegating everything. Their only role at the workplace is to read 3 newspapers in a day, as if they're going to do an exam from these newspapers. And then, of course, the other duty is to sit around some comfy chairs, very comfortable chairs, red in color, and swinging around and throwing, in this case here, names. At the end of the day, those bosses can never make processes work. So what have we said about processes? Automate, have employers, have bosses who are able to put those processes at their hats and know that it's about them, not about employees. Especially kwa mjengo, I was nicknamed Nyapara, whistle of a cow, whistle of a cow. Those are the honest kind of honest students we like here. Ladies and gentlemen, after that, we go to the last quadrant, and the balance scorecard, we have the last quadrant. The last quadrant is known as learning and innovation. So number one, the first perspective is financial perspective. Number two, the customer perspective. Number three, we have the internal processes perspective. Number four, we have learning and innovation perspective. And learning and innovation, take employees to classroom, let them study. We have in this case here, we Africans, we are chopping, or rather we are paying 50 shillings for each employee to NITA, National Industrial Training Authority. So we are supposed to have the government training these people. But we get so many companies that are not even utilizing their NITA, simply because you don't want the employees to grow. You think that when they grow, they will be able to compete against you. No, that should never worry you. You train these people, do the very best to these people. You don't know how tomorrow will be. They may go outside there and become very big employers, and then they even employ you, but they buy your farm at a very high premium. All right? All right? Very important for us to know this. So learning. Hapana kana employees ambao ni maembe kwa kampuni. Hata for example ambao mko na house managers. Hapana kubali house manager ambao umpeleki training kidogo hapa na pale. Hiyo ni international, ile siku utakuja kupata ameweka mtoto kwa fridge. Kwa sababu mtu amekuwa na temperature kidogo. Itakuwa international disaster. Hata mlipie computer namna hii. You know, times we keep on in this case here blaming Indians that these guys, but what are you doing yourself from your homes? So it's learning, train your employees. Then we have innovation. Innovation is all about coming up with new products. Like now at RCM College. I mean, for the very first time, now we are going to begin like weekday full-time classes, which will be running from 8:30 to what year? To 4 p.m. We have realized that there are students who are really at home and they don't want to wait for the night classes, you know, so we need to look for an option for them. So every time come up with a new product here. Come up with a new product every time. Come up with new products. It's only companies that come up with new products that at the end of the day flourish. Remember, the Right Honorable Amolo Odinga, sometime back in 2017, he came and told the people to resist. And among us, those companies that he had instructed his followers to resist are Safaricom, the milk company, Brookside, among others. These other companies in this case here were very hit with that directive. Like Brookside's revenue went down by more than 50%. On the same front, Safaricom's revenue grew by over 10%, simply because of how Safaricom is innovative, simply because of how Safaricom is able to come up with new products often. Of course, of late, they are not really that innovative. But I think during my course and that other guy who died, those guys were very, very innovative. So even these leaders of those time at ODM, they would not resist the urge of checking their phones to see whether there is anybody who has sent them M-Pesa. So we need to innovate. Remember, when you have innovated very well, then you have hit what we call the blue ocean strategy. You have hit what we call the blue ocean section. You know, you've got two sections in the ocean. We have the red ocean where we have these crocodiles eating. Crocodiles are competitors, they'll eat you. So this section here is called the red ocean, where there's a lot of fighting. And then we have now the blue ocean section inside there, where in this case here now competition is not even your worry. Because now you've been able to diversify, you're like an octopus that has got many heads, many streams, revenue streams. So according to this balanced scorecard model, ladies and gentlemen, we must be able to spur our financials through the financial perspectives, look at our customers through the customer perspectives, look at our processes, and then of course we have learning, which will be able to make these employees here become innovative, and then the company will be able to go up there. Ladies and gentlemen, with that explanation, first of all, are we together? Are we really together? Are we really together? Tuko kimoja kweli? Tuko kimoja. All right. Then if you don't mind, ladies and gentlemen, I'll be able to go now to the last sections here. Inventory control decisions. Under inventory control decisions, we want us to teach you guys EOQ, economic order quantity. Whether we want us to talk about the square root of 2D core, 2D CO over HC, where we have in this case here, if you remember, like the demand, ordering cost, I'll be going through that. And once you get this economic order quantity, then you must be able to know how to get ordering cost. You must be able to know how to get the holding cost, etc. Then we have the stochastic, the probabilistic, where I'll be able to draw a schedule for you. We have a marginal analysis for perishable stock items. We have the simulation. We have this JIT again here. Then we have budgetary controls, ladies and gentlemen, and the budgetary systems. We shall be able to teach you guys how to come up with a flexible budget. Once you have a flexible budget versus actual, we shall be able to teach you guys how to get variances. Very common in your exams. It came last semester. We shall be able to teach you what we call creation of a zero-based budgeting system, a ZBB. ZBB. So under ZBB, we don't make reference to previous year's budgets. We start creating everything from scratch as if this farm has been born today. So if it's a 30-year-old farm, we forget the old numbers and ask for fresh numbers from suppliers, and then we create budgets from scratch, from zero, and then we build zero-based budgeting. We don't make reference to last year's budgets. Ladies and gentlemen, from there, we have variances. Of course, we have the last one here, which is environmental management, what year accounting. Under Emma, right now, things are becoming too hot. I don't know even these world leaders, whether they'll be able to arrest the kind of, global destruction that we have because of the change in climate, the global warming, the ozone layer being depleted. All right. You can see the kind of weather patterns we have, which are very, very unpredictable. All right. And that is why we're being called as accountants to always think about how do we account for environmental issues. So then, gentlemen, we have come now to the end of our presentation for what is ahead of us, advanced management accounting. I would want to take you for this subject. Of course, I'll be taking you for this subject together with Clinton as usual. All right, I'll do more sessions, but I would really want to put this plea to you. Please ensure that you bring in as many students as we have for the other papers. Like now for AFM and BDA, I've never had a problem because I know those two early morning and evening. I know I would get more than 400 students. But AMA is a bit erratic, but from the number that I'm seeing here that is live with me here, I'm so sure you guys will be able to give me very good numbers this time around. And then, of course, as we finish, we also remember the concept that we should be able to get to our LinkedIn, make LinkedIn page very well, link it to your CV, and then ensure that you get us reviewing your traits which you put there. And then, of course, for RCM, I would want again to make another plea. Go to LinkedIn, search for RCM College. I only want you to follow. You can follow me. That's RCM College. And then you ensure that you do what here. You also leave a review. You like our services. You can leave a review there, and then ensure that you are sharing that with me. That will really be very good. Facebook, I don't want you to help us in Facebook because Facebook, we are 30,000 now. 30,000, that's quite enough. But again, for your own sake, you would want to get like whatever content we post, just look for RCM Online College on Facebook. Also like it, like that. Otherwise, it has been a pleasure hosting you. And I believe now I'll be able to host you as my real students who will be in my paid groups. So if there is anybody who is new and would want to really become part and parcel of this great organization, please don't hesitate hitting this number 0793 555 555 000 0793 555 000. Otherwise, thank you very much. Thank you very much. Yes, Mary Ann, I'll be able to share this with you. I'll be able to share this with you. Otherwise, you're great ninjas. Yeah. Otherwise, you're great ninjas. You like the subject. It's a great subject. You're great ninjas. Let's hit the road as great ninjas, running and boxing. Let's box this CASNEB. We jump from CASNEB, we become members of ISPAC. Good evening. See you for advanced whatever.